Dividend stocks have underperformed the general market, certainly since the lows of April. So I thought it would be a good idea to take a step back and see if we are missing something. My name is Mark Williams. Joining me is Francois Savary. Hello, Francois.
Hello, how are you?
I'm good. Thank you. How are you this morning? Before I go any further, I just wanted to point out that the purpose of these videos is educational. It is not investment advice. If you find any of the themes interesting, please do your own research. Francois, I am right in thinking that dividend stocks have become more interesting, certainly than relatively than a couple of months ago.
Totally agree with you. The point is, at the end of the day, the rally that we had since the lows of April was mainly driven by cyclicals and especially by technology stocks. It's the revival of the Magnificent Seven because the numbers that were published were quite good. And the fact that people had doubts about the future of AI investments when the earnings season began was absolutely not confirmed by the numbers that were produced. So you had really, in a way, relative outperformance of those kind of company compared to dividend yield stocks, which are more defensive by nature. So at the end of the day, are they more interesting? I think so when you consider the relative performance of the different sectors of the market. But there is one point that you still need to have in mind. The main competitor to high dividend yield stocks is the bond market. And the bond market has performed poorly in the course of the last few weeks. We all know that you have a lot of questioning about the risk that the interest rates are going up in the US in connection with the big beautiful bill in the US, which is going to lower taxes, but is also going to increase the public deficit in the US. So it all depends about if you want to make a choice, if you want to be more defensive, i.e. buy bonds because you believe that there is going to be a slowdown in the US economy, that there is going to lower interest rates in the US, or if you think in terms of sector in the equity market.
All right. Well, let's look at the negatives then in investing in dividend stocks. And you just mentioned it, I think. Jamie Dimon is very concerned about the bond market for all the reasons we know. But you may wish to remind us, how do dividend stocks behave when bonds are going up in terms of yield?
At the end of the day, it depends. Regarding the second part of your question, it depends. But at the end of the day, it's a substitute, and you say, okay, if the bond yields are going up, there is no reason for you to buy dividend stocks, especially if you consider that the Fed is going to lower interest rates in the coming quarters, and that at the end of the day, it's going to support the bond market. So you prefer to play the fact that you are going to be benefiting from there. And if there is lower bond yield, it means then that the long duration companies like AI are going to perform better. So at the end of the day, normally you would not go for high dividend stocks in this environment. Nevertheless, there is something that is very important and very different in the current situation, is the fact that over the course of the last few months, you have growing doubts about the ability of the US economy to manage the fiscal deficit of the economy, which is going to grow with the current tax proposal. And so that's something that is going maybe to refrain investors from going into long duration bond. That's my position in the coming months. And that's the reason why I believe that high dividend stocks could be quite interesting.
I'm going slightly off topic here. Is Jamie Dimon right to be so concerned and to be announcing it so publicly?
The problem of Jimmy Dimon is that everybody knows that there is a problem with the fiscal deficit in the US. Everybody knows that the debt of the US is on unsustainable path. It's not possible for the US to manage. And we had this discussion last week. Can they outgrow the debt? I still have doubt about that issue. But Jimmy Dimon did not give a time frame for such a development. So we all know that this issue is a very important issue. There is a risk, and clearly the market has built this risk in its anticipation and expectation. As the market fully priced that risk, I don't know. Nobody knows at the end of the day. It's everybody's guess. I still believe that this is a major issue for the US economy, especially if you add to that the fact that the US dollar is getting weaker. And I think that it's also the proof that there is less interest from foreign investors to get into US Treasury bonds and finance the public deficit of the US and the debt of the US. So I think that you need to be careful with what is happening on the US dollar. And that's the reason why this morning, for example, it was interesting. There is an article about a big American house, which now forecasts the US dollar at 125 against the euro by the middle of next year. And the main reason being that they foresee that there is going to be a significant slowdown in US economy. It's going to induce the Fed to lower interest quite significantly. So connect your view on the debt sustainability to the development on the US dollar is something that is very important. The best proof of all of that is that in this environment, the gold price remains very, very high. And each time you have doubt about tariffs or doubt about the public debt, gold price is pushing higher.
Jamie Dimon has called for authorities to be ready to be able to react to protect the bond market in the event of a rout, for instance. This is really off topic now, but if there was some quantitative easing reenacted, is that a political decision, i.e., is it the Treasury who decides that, or is it the Fed?
It's the Fed who decides that. It's the Fed who decides the Treasury. But don't forget one thing. Jimmy Dimon has an interest in trying to promote the notion that there is a risk that needs to be addressed very quickly. It's the fact that the current regulation in the US impose some restriction or impose the fact that banks need to maintain a certain ratio which comprise treasury bonds in the leverage ratio. It's a technical issue. So Jimmy Dimon would like to see these regulation to be repelled because he has an argument and he says, if we can use the money that is set aside because we hold treasury bonds in our asset and in our calculation, if we can eliminate that, we can be again acting on the bond market and it's going to be supportive for the bond market. Don't forget that. But quantitative easing and tightening is a decision by the Fed.
Can the Treasury encourage them to do it? Can they bring pressure upon the Fed?
There could be some pressure, but at the end of the day, again, the U.S. Central Bank is independent. They are reducing their quantitative tightening for the time being. They are not going for quantitative easing. They are reducing the size of the reduction of the balance sheet of the Fed. I think that with Mr. Powell is somebody who can be stubborn, is somebody who is moving the lines he has set. I don't see the Fed moving from still going through quantitative tightening and moving into quantitative easing very quickly.
All right, coming back to the subject in hand now, dividend stocks. Which dividend stocks do you follow quite frequently?
I would say that you have pharmaceutical stocks, you have financial stocks, insurance and banks. They are providing you with solid dividend. You can have some oil companies that provide you with solid dividend and interesting dividend. I think that those are the sectors that we are looking at when we consider dividend stocks.
Would you agree that this is the right time now to start looking at dividend stocks?
Yes, because I think that the market is a bit ahead of itself, and the propensity of market participants to consider that everything is rosy is, to my point of view, a bit excessive. You know, at the end of the day, last week was the proof on the pudding. When you see what is happening again with this issue of tariff, are they legal? Are they illegal? Now it's in the court, and you are then again tension between China and the US when it comes to are they really applying the decision that were made 2 weeks ago in Geneva? You still have this issue that suddenly you have a threat on Europe that they will face 50% tariff. You still have this issue of the debt and the fiscal deficit in the US. I think that you have a lot of questions that are unresolved and that justify to be more defensive than aggressive on the equity market for the time being.
I get what you're saying. However, NVIDIA had its earnings announcement last week. Pretty solid numbers, especially in the data center business. Do you think NVIDIA's reassured the market? Do you think those companies in general have done enough to reassure on corporate earnings?
I think so. I think that what happens during the earnings season, and I was cautious on that because I wanted to see the reality of the numbers, but clearly they have reassured, and Nvidia numbers were very solid and very good numbers. And they are also going to come out with new chips for the Chinese market. They have solid development, prospects are good, and as I said at the beginning, clearly what has happened with the earnings season is that the AI investment theme is still working, and there is continuation on this trend, despite the fact that after the DeepSeek issue in January, there were a lot of fears that suddenly there was an excessive investment in AI. So I think that the companies are proving that investors were wrong to be too worried.
What are you looking forward to this week?
There are different elements. The first one is the reaction to the fact that it seems that in Poland the conservative candidate has won the election. It's a surprise because the more liberal candidate was leading the polls for quite a long period of time. So I think that's something interesting to watch, and the consequence, will it have an impact on the euro? I will look at the Commission decision on the report concerning the fact that the Bulgarian currency could join the euro by January 26. Is it going to happen or not? I will take a look at the non-farm payroll in the US, still a very important numbers, especially when you look at Mr. Walker's speak at the end of last week, where he opens the door to a cut interest rates in the US. Will we see non-farm payrolls moderating? Don't forget that jobless claims were not particularly good last Thursday. So it's something that is very interesting to watch. And I will watch the economy in general in the US with the ISM numbers, which are going to be published. And usually they are a significant indicator for midterm development on the economic front.
Well, thank you very much for joining us today. I look forward to speaking to you next week.
Bye-bye. Thank you.
Bye-bye, Francois.